Anyway, I want to thank you all for coming here today. I have actually rejoined the cabin crew here. I've been working from home up to this point, so today's my first day back in the office, and it just seems strange. I was late to work, and as much as I can say I was working at 6 o'clock this morning, it just seemed weird to be here. So there will be an adjustment. I think we'll all have to kind of deal with that a little bit. Anyway, I want to thank you all for joining us. We are recording this for anybody else who isn't able to join us at this time. And we have a nice group of panelists here. There have been a couple of announcements in the last week that we wanted to share with you regarding funding. There have also been some extensions to the CEBA program that we're quite excited to happen and are probably the result of a great deal of work that's been happening on behalf of the Chamber network with regard to who we knew was slipping through the cracks. So we have Amber, who will talk a little bit about the Rural Fund, and then Brandy, who has something through United Way. So Amber from Trenval and Brandy from United Way are here joining us. We also have Adam Brown and Benjamin Parks from RBC and TD Bank, in that order. And they are going to give us some feedback on how the application process has been expanded, what you should expect to see, and maybe some details around what happens once you get that money. And then we also have Adrian de Groot from Wilkinson and Christina Wallace from Wallace Law. And each of them will be able to provide some legal and accounting experience or guidance if you have any questions about how you move forward once you get the money. How are you supposed to document that? Are you able to use it for certain things? And so knowing that those two local experts are on hand to answer some of those questions as we move through it, we're excited to have them. So we'll start with introductions for each of you and just maybe give us a little bit about your program. And then if we have some questions, we'll move from there. So Amber, if you don't mind, I'll start with you.
Yes, thanks, Jill. Amber Darling, I'm the Executive Director at Trenval, and we're at the Quinte Business Development Center along with a number of our partners such as QEDC. Adam Brown is there, and Brian are with RBC. We have Business Development Bank of Canada and the Small Business Center. So we are all there working diligently from home, or some staff in the office right now. And the recently released Regional Relief and Recovery Fund is what Trenval's big announcement this week has been. We're following on the heels of FedDev Ontario, or FDO as we say, with their announcement as well. So did you want me to talk about that program now, or let all the intros go through?
Why don't go ahead.
Okay, so the RIF program, Regional Relief and Recovery Fund, was announced by the federal government on April the 17th. And although it took a little while, it took almost a month to get it out into the Community Futures offices. In Southern Ontario, the fund is worth $39.4 million, and that's delivered through FedDev Ontario, which is the regional development agency. When you hear about these regional development agencies, there's, I believe, 6 across the country. And these agencies were set up probably within the last 10 years. So they're not that well known, but are becoming more known for their funding opportunities. So for the government to push money out to the local community futures, Trenval received just under, we haven't actually got the money yet, but it's coming, just under $1 million. So other community futures like ourselves surrounding us, there's Northumberland County, Frontenac County, Bancroft office, as well as Pella, Prince Edward, Lennox, and Addington, CFBC, they'll all be receiving similar amounts. Similar amounts, it's all based on a calculation. I don't know what those calculations are. I do know that we're just under $1 million. We're about $6,000 or $7,000 short of $1 million to distribute, and we're hoping to distribute this fund into the community for businesses that did fall through the caps. Now, with the recent announcement yesterday that they're expanding those the criteria, that will lessen hopefully some of the impact or the actual number of applications, so that we can hopefully we'll take everybody that making through that emergency relief benefit. So locally, how do you apply? You have to go to our website. There's an online PDF form. You work through it. We've tried to eliminate any duplication, any information that we don't need. So what is on that form is actually what we do need. We're not asking questions that don't need to be answered. We are under a contract with the Government of Canada. We do have to collect statistics. Some of those numbers in there are statistic based, and that's what we have to continue to provide. By providing this information to the federal government, we'll say, is there more requests for what that 40,000 is? And then all this data gets put up. And if the business community requires more than that, then they may make adjustments in the future. But without data, they can't do anything. So on our website, you'll see a question and answer document as well. People can review that. It kind of gives you a little bit what the funding supports, what the eligible costs, and so forth like that. That was provided to us by the Government of Canada. We will have some additional local stuff on there as well as we get going. To date, which is only 2 days, we've received over 20 inquiries, and we've already approved 3 loans, and that's just in the first day. So I want the business community to keep in mind that Trendval still has the same number of staff that we had before COVID-19. And usually we do between 25 to 30 loans a year. In the first 6 weeks between March 16th and May 19th, in that 6-8 week period, we did 25 loans out of the Trendval Investment Fund. As well, this will add on another 30, approximately another 30 loans, but we're still dealing with the same number of staff. So we are getting through to all inquiries. You will get a call back or some kind of email correspondence within 24 hours. And if you are approved, money should be in your account within a few days. It'll certainly move faster once we actually receive the funds. So this will help all the Main Street businesses that didn't have, I know that they've lowered the amounts now, but it was under that $20,000 payroll. We're talking the retail stores, the corner store, the hair salon, the gas station, all these little businesses, and not just little business, it's a big economic factor in our local community, but little in the government's eyes that they didn't think about and didn't address those gaps. So that's what our fund locally will address. So we have these funds that Trendval will deliver are, it is a term loan, meaning with some of the funds that were through the banks, it was actually kind of like a line of credit, and the 40 grand was sitting in your bank account, and you could draw on that as you needed. With Trendval's fund, we're not a bank, so we don't have those capabilities to run like a bank in the internal measures. So if your application is approved for $40,000, you will receive $40,000 in one lump sum. Now, if those funds are repaid by December 31st, 2022, you will receive a forgivable portion of 25%. So if it's not repaid, you will then turn into your original 40,000, if it is 40,000, into a 3-year interest bearing at 5% over the next 3 years based on a fixed amortization schedule. So we've implemented a little bit of reporting in there. You have to be able to fill out a online survey every quarter beginning next January. But other than that, it's pretty clean, it's pretty slick, and we're hoping to help a lot of businesses out there.
All right, well, thanks, Amber. And I don't know if anybody caught the little note on the bottom, but if you see the bar along the bottom where it says chat, if you have any questions that you want to bring up as one of our speakers is talking, feel free to enter them in right away. And then as we go through the process, we will we'll bring you forward as well. We'll unmute you. And just so you know that if I hear any rattling noise in the background, I will mute you. And you may have to ask to be unmuted. You can unmute yourself, though, if you do have something to say. So now I'm going to pass it over to Brandy Hodge from the United Way. If you'd like to just describe the program that you have and some of the different things you're doing in the community right now.
Sure. Thanks, Jill. My name is Brandy Hodge. I'm the Executive Director here at United Way. Thank you for bringing us on and remembering our not-for-profit sector as a big part of our economy and our local community as well. So for those of you, there's some folks here that I know are in the not-for-profit sector, but for those of you who are board members, Adrian working with the not-for-profit sector within Wilkinson, how you can share information out. We're trying our best to get information available out to the not-for-profit sector, but we're restricted in our means and our capacity as well. So the more you can share it, we appreciate that. We have two different streams that the not-for-profit sector can access with us. So the first one is a smaller one. When the COVID-19 first started in our area, we launched a COVID-19 community response fund. It was an opportunity for local individuals and businesses to contribute to the charitable sector as they ramped up their services. As business was ramping down and being forced to close, the social service sector was ramping up, and they were having to change and modify everything that they did and the way that they did it in order to accommodate the vulnerable people in our communities. And people who were considered vulnerable for the first time maybe were having to access supports and help. So we ramped that program up not only to raise money, but also for some of our bigger corporate partners to distribute product. And so there was a lot of product made available through partnerships with Procter & Gamble, Nestle, that kind of thing. So there are small grants available through that community response fund, really to support anything within the not-for-profit sector where agencies are having to increase their own capacity in order to deliver services in an equitable way for their client base. The second one is a new partnership for us. It's the first time that United Way has been engaged in the allocation of federal dollars to the not-for-profit sector. So a few weeks ago, it seems like a lifetime ago, Justin Trudeau announced a $350 million emergency community response fund. And those funds are being made available to the charitable and not-for-profit sector across Canada. The allocation of that was split between three different large national groups. So United Ways of Canada partnered, Community Foundations of Canada, and the Red Cross. Our portion of that is funding that will support charitable work that is happening in direct response to COVID-19 by community-based organizations. Funds have to be spent by March 31st. So these are not sector stabilization funds. These are funds that are meant and intended to directly support the provision of community-based services for vulnerable individuals. We have locally, United Way Hastings and Prince Edward is allocating, we received $489,000, and the County Community Foundation received $75,000 to support Prince Edward County, and we are working closely together. So we've streamlined our application process, and as Amber said, we've simplified it to being just what is the basic information we need to satisfy the reporting requirements with the federal government in order to make the funding decision. So we've tried to really simplify that. And we're working with the County Foundation to make sure that we're leveraging the available funds across the area as much as we can. So there won't be any duplication. We're working with them on our allocations process and the application process moving forward. So like I said, there is a little over $500,000 available for the whole region. Some of that is specific to Prince Edward County, and some of it is for Hastings Prince Edward. The application is available on our website. So if you just go to unitedwayhpe.ca, and they can give us a call, we're happy to answer any questions. There are some tight deadlines on this. So we haven't got the money in the bank yet, as Amber was just attesting to on her end as well. We get lots of information that flows very rapidly, and then we turn it around really quickly. So we have a June 15th deadline that is a deadline for equal consideration. So any organization that gets their application into us by June 15th, those applications will all be considered equally at the same time. If we are not fully subscribed for the funds at that point, we will receive applications on a rolling basis until those funds are spent. The funds have to be spent and out to the not-for-profit charitable sector by July 31st, and they have to be spent by the sector by March 31st. So it's all very quick timelines, so the more questions we get right now, the more people who are interested in the funds want to talk about it and get their application, and we're happy to process that. Are there any questions?
I think Amber is thinking the same thing I am. And do you have an example of someone who has applied, or what kind of a project actually fits the bill for this kind of funding?
Yeah, sure. Thanks, Joe. We launched it yesterday, so no one's applied yet. But it is the types of activities that are included in this are any community outreach or engagement, delivering or developing new models, tools, programming services, and information and knowledge, volunteer engagement and recruitment, and anything else. So there is, it's really any program or service that is aligns with the service sector, but in direct response to COVID-19 programs and services. So it's not about just supplementing your budget or paying for something that is currently happening within your budget already, but anything that is in addition to your typical normal services and activities. Any other questions?
I have a question.
Sure, Sally.
Can you claim under this for things that you've already bought? The example is that we're packing hampers for the food bank, and we need tables and shelving. So we've already bought some of it because it's just we had to get on and do stuff. Mm-hmm. So are we able to claim for stuff that we've already bought?
My understanding is no, Sally, but I will double check into that and get back to you. Okay. Yeah, and I'll look into it. There have been some really specific questions that we can filter down to United Way Canada, and then they are working with ESDC on that to get the questions. My understanding is that it's not retroactive payments, and it can't be used for anything that you've already received government funding for. So if you're already in receipt of the wage subsidy for your staffing, you can't apply to this fund to cover 100% of your staffing because you're already getting federal support for that. So yeah, so I don't think so, but I will double check on that.
Okay, thanks.
You can apply to United Way's Community Response Fund though to help with those small costs, Sally, that we can talk about that from the other fund, just not the federal dollars.
Okay, thanks.
Okay.
Hi, Brandy, it's Dave.
Hi, Dave.
How are you?
Good, how are you?
Fine, I was another Zoom call. Sorry, I'm late. Zoom's my life.
Yeah, mine too. It's actually kind of nice, actually.
So, Brandy, I guess the question I have would be, and if it doesn't fit, then you can just go ahead and say, Dave, that won't fit. So, what are the considerations we have to make as an organization? And we're probably going to be in around phase 3, I would imagine, for the Y to reopen. But in my discussions with Todd, we talked about the need for some essential services, and the day camp model is one, and it's going to be a lot different. And I said to him, where I could have 100 kids a day or whatnot, or my ratio at 1 to 10, my ratio is going to be down to 1 to 5. Mm-hmm. And operating at a 1 to 5 ratio is a loss that the organization can't take.
Right.
There's no way around it. But we would see a day camp service being necessary to get the economy rolling again, to get people back to work. My understanding is childcare is going to be in phase 2. But as we start looking at the planning around day camp.
Hello?
Sorry? As we look at the planning around day camp, would be around safety for staff and safety for kids, and the numbers to offset the numbers. So that's where I'm wondering if there might be funding available to offset the loss that's going to occur.
Yeah, and I would suggest yes, Dave. I think that's something that we can look at. I think that it will be not so much offsetting the loss, but covering expenses that are associated, increased expenses associated with that. So yeah, I would say that would definitely work. Let's have an offline conversation then about how to make that work.
Sounds perfect.
Okay.
We can partner.
Absolutely.
Right on.
Anything else?
Thank you.
Are there any more questions then for Brandy, or shall we move on to maybe talking to our bank people? And we can certainly go back to any one of these participants or panelists afterwards. So, okay, why don't we start with Ben Parks from TD Bank? And just a couple questions. I think we did apply for SEBA, for example, and the money just showed up in our account. I'm actually curious about how I go about spending that, and how do I activate that? Do I transfer it from one account to another? How do I move it around? And how do I track the expenses?
Sure. So I'm Ben Parks. I'm the account manager for small business at TD Bank. So yeah, the SEBA loan, I'm sure everybody knows about it, is a $40,000 interest-free loan. At TD, we're doing applications. It's through an online portal, not through online banking. So it's a little bit different. So it's through a website. It's td.com/businessrelief, and there's a form you just have to fill out. You're gonna need your account information, as well as your T4 summary and your payroll number as well, and obviously some contact details. Once you apply through that, like I said, basically once that loan is approved, that $40,000 gets deposited directly into your business account. As far as the bank is concerned, there isn't really restrictions on what you spend that on. The bank isn't going to be controlling where you spend the money. If you want to transfer it to a different account, if you have multiple accounts and you need to spend it somewhere else, the bank has no restrictions on that. That money will just show up into your account. It's not a separate line of credit. It's a deposit right into your operating account. The money is interest-free until December 31st, 2022. And if you pay back 75% of it, the remaining 25% or $10,000 will be forgiven. You won't have to pay it back as long as that's paid back between now and December 31st, 2022. If you don't pay back the full amount by December 31st of 2022, whatever is remaining of that $40,000, if you made a partial payment but not a full payment, say $20,000, whatever's remaining on that $40,000 will be turned into a 3-year term loan with an annual interest rate of 5%. Minimum payments on that term loan will be monthly payments of interest only, and you can make principal repayments at any time. There's no restrictions on that. So that is the sort of the basics of the SEBA from TD's perspective and how we're doing the program. It's an online application through the portal, and the funding is going directly to your bank account.
And now I'll go ahead and ask Adam if he wants to give the RBC perspective. I'm sure it's not incredibly different, and then I'll probably have a couple questions for both of you.
Thanks, Jill. Yeah, so not much different other than we administrate it with an online banner on your online banking that you click on. You then go through the process, and it's administrated as similar to a credit card facility, but a credit card operating line facility that you'd be able to draw on and utilize. Again, Ben and Amber did mention on the administrative side of how it looks. So again, no need to verify anything with RBC as well, that you utilize the funds. So that's on the SEBA side. I can tell you a little further to that, we partnered with and any of the banks, and Ben can mention this further, with a EDC and BDC loan as well, called the BCAP loan. And I don't know, Jill, if you want me to chat on that one as well a little bit, and just give the process on as a little bit additionally to that. And also how the government's made the changes for the SEBA to help some of our smaller sole proprietors recently, as of yesterday, that we're going to see some changes in the next few days on both for myself and Ben, for all our sole proprietors that didn't make that eligibility, that the eligibility has changed now to help some of our small businesses. And as Amber mentioned a little bit before about the gaps that we found with some of our small businesses, how that's really going to help a lot of our in the community and really fill those gaps. And I can tell you that, yourself included, the other chambers have really helped with that, voice that to Parliament to say there was some gaps those needed there. So.
Yeah, no, for sure. Please do talk about the extended eligibility criteria, because that is something we have been actively pursuing at our federal level with the Canadian Chamber, and certainly pushing it up through the Ontario Chamber as well. At a call, it was kind of like, so we've cast the net quite wide and said, yeah, the holes are still pretty big. So lots of fish were still falling through. So I'm hoping this will capture some of that. And
Yep.
that's exactly what the focus of this chat was, to kind of, if you missed out before, how can you maybe still find a way to survive during this unprecedented time? So please do feel free to explain a little bit more about how they've increased that eligibility. And Derek was going to try and join us today, but wasn't able to. So thank you for reminding me about BDC. I'll turn it back over to you.
No, so back to the CEBA just quickly. Originally didn't help with our sole proprietors, which again is the majority of our small businesses. So they recently just announced yesterday that as any non-deferrable expenses between 40,000 and 1.5 million and now are eligible. So those include rent, property taxes, utilities, insurance, or some of them just in broad detail right now that can really help some of our sole proprietors that they were filled in on that. And further to the BDC in EDC BCAP. So right now we're working again to fill those gaps. We partner with them and any other banks partner to help. There's a criteria process with them that they can fill out with any of the banks or BDC or EDC that they have to show how they made changes in their business during these times and how we can how they become eligible for this. And it's a 5-year repayable term on that one. Ben, I don't know if you want to chat a little more on any of those. I'll give the floor to you.
Yeah, so the BCAP loans through BDC and EDC are also available at TD. They're available at any financial institution, as Adam mentioned. A lot of, I'd say for those loans, they get adjudicated at the bank a lot of the same ways that any other business loan would be. They still have to meet the same adjudication criteria. Go through TD, especially the EDC co-loan program there. So we'll be collecting a lot of the same information. There is some additional attestations that you have to make as far as what fixed expenses are and kind of get an idea of that. So there's a little bit of additional information that we collect, just get a more thorough understanding of exactly where the money's going there.
If there's any questions, we're happy to answer. Jill, if anyone.
Can I chime in for a minute?
Please do.
Okay, so yeah, this expansion of the CEBA loan is a really big deal. It's like, we've got a lot of clients that we do tax planning for, where they would be paid dividends instead of salary. And so a lot of these owner managed businesses, it's a lot simpler for them to pay dividends. And by expanding this criteria, it makes a ton of businesses eligible for this. So this is huge. And like you guys mentioned, there's going to be these eligible non-deferrable expenses. What are they? We still don't know at this point what those expenses are going to be, how it's going to be calculated. And so I think it's between 40,000 and 1.5 million of those kind of expenses. So that's certainly something we'll be monitoring as well, because it seemed like when these things first came out, they were posting updates like hourly. Like it was ridiculous how fast they were coming out. And they would make a change to the CERB and it would be reasonable. They were listening to what was going on. But the CEBA one was one that they didn't seem to want to budge on. And so this is a huge relief. Businesses who pay dividends, businesses who have a lot of contractors, these would all be prime candidates for this. Even owner managed businesses that just have a business account. So this is huge. We're really pumped about this. That's all.
Yeah, thanks, Adrian. That's great. Appreciate you coming forward with that. And we also have Christina still here. She's up here on the corner. On my screen, she's up in the corner. So just any questions from anybody? I'll kind of unmute you all at this moment, or I think you can unmute yourselves. You're going to have to unmute yourself. We are in meeting format, so if you do have any questions at all, please feel free to extend them to our panelists, or if you have any general questions about how things are going, please feel free to bring them forward. Are there any questions that you guys are receiving that you might be, like, are there common questions you're receiving? that you might like to share an answer to, because someone else's question might actually serve someone here on the call. I'll throw this out to you, Adrian, because I keep asking about this whole, how do we track the money that we spend and what do we expect to have in terms of reporting requirements? Any idea? I realize it's probably too early to tell, but is there anything you would recommend people do right out of the gate?
Yeah, I would say if you're applying for the 75% wage subsidy, one of the things that we found out, I think it was last week or the week before, was that they're actually going to require you to put that wage subsidy that's been received on the T4 of the employee that's receiving it. And so I'm not really sure why, what the method is behind that, but basically anybody who you're receiving a wage subsidy on behalf of, they're going to know that you received it as the employer. So, if you didn't, maybe if you held some of it back, they're going to know that you received the subsidy in respect of their wages. So I can't imagine this would help an employee-employer relationship. But anyways, that is one thing that you're going to have to be tracking. So if you don't track it right from the get-go, it could, create a headache later on down the road. If you're getting reviewed or audited financial statements, we're going to be treating these just like government assistance. So like any other government assistance that you'd be getting. And so it has to be netted against, there's a few different accounting policy choices you can have with that, but in this situation, it would be typically netted against the salaries and then have to be disclosed in the statements. So you want to make sure that from a bookkeeping perspective, it's probably easiest if you just put it in a separate account so that you can see exactly how much of a credit you're getting for that. And you can offset it on your financial statements, but at least it's tracked and it's really easy to know exactly how much you received, and you can disclose it easily. And if you do need to put amounts, like if it's in relation to the 75% wage subsidy, that you can easily tie that into the amount that you put on your statements. All of these programs, the benefits that you're receiving from them are taxable. So this could be a bit of a rude awakening for especially people receiving the CERB. I would imagine most people receiving the CERB are employees, and there's a good chance a lot of them are living paycheck to paycheck anyway. So if they go out and they spend the $2,000 on whatever they're going to spend it on, there's no tax going to be deducted from that. They're going to have to pay at least 25% of that back. It's going to be an ugly tax season next year, that's for sure, for a lot of these people. It's so if you've got friends or family that are receiving this, I would certainly just kind of put a bug in there and say, hey, by the way, did you know this is taxable? Are you saving a chunk of it? Don't spend it all in one place. All of these loans would be, sorry, I see a question there from Amber. Will the 25% forgivable portion of the loans be taxable income? Yes, that's my understanding. They would be taxable as well. So it would all just factor into your business income and be taxable with everything.
Yes, and actually Liz from Pegasus Chair, I'll let you ask your question, Liz.
So I'm just wondering, does it have to be the individual person who is applying for it, or can I get my accountant set to that task?
So is this for the CEBA loans?
No, it's for the business loan. For the 40,000, not
yeah,
for.
Sorry. Yeah. That's the CEBA loan, but go ahead.
Yeah,
Adam.
sorry.
Like you're going to chime in.
Great question, Liz, and thanks for the insight there on Adrian. That's great advice. But so Liz, yes, you would apply for it yourself. Your accountant wouldn't apply. So what I would recommend for you is to reach out to your local bank, whoever you deal with, and they'd be able to help guide you through it. I know Ben mentioned how TD does. I mentioned how with Royal Bank. So I'm not going to put you on the spot here and ask you who you deal with, but I would say reach out to them, and they would help you manage that better for sure.
So, and this loan is being offered by credit unions. I may or may not be working with one of those.
Yeah, so credit, that's a great point.
Asking for a friend.
Yeah, that's right.
So I was actually on a call yesterday because I wasn't aware of this, and it's great that we're bringing this. The credit unions actually slipped through the cracks. So again, the government didn't see that at first, and now is available through credit unions. So yes, you are eligible now to apply through the credit union. So I would reach out to your credit union or be able to see it online and look through their portal online to do that. So.
Great.
Yeah.
Thank you very much.
And just to give you a heads up, as someone who went through the application process, you need your business number on hand. You need to have the T4 summary amount, what you paid in, or the amount that you paid in salaries last year. And I believe those were the only two kind of pieces of information I had to get on hand and put into that application. Everything else was pretty straightforward. So that is why it's very easy for the business owner to do the application versus asking your accountant to do that. It's within your pay grade. No.
It's well, and to be honest, I pay my accountant enough as it is. So the little bit that I can do myself is a help right now.
Yeah, sorry, Adrian.
I can just jump in there from a legal point of view. As part of the application as well, the owner or director or officer of the company has to do an attestation that they are eligible for these loans. And a false attestation can result in civil or criminal penalties or liability. So something to be aware of. And my understanding as well is that every employer can expect at least one call from the CRA to verify certain things following this whole.
Yeah, a very good point, Christina, because in fact, that was, I think, what was holding my application up. I forgot, I didn't see that one box I hadn't picked. And so I thought it wouldn't agree that I wasn't a robot. And as much as I tried to tell it that I wasn't, it just kept kind of defaulting. And so I thought it was my internet connection. I thought it was a few different things, but I think there are a couple of spots where you have to tick off the box if you don't. So very good point to your request there, Liz, as well. Yvette also has a question, so she's unmuted. So Yvette, if you would like to ask, this question is a great one.
I was just wondering, we did receive the $40,000 deposit to our bank account. And when we're ready to start paying it back, I'm not sure how I can go about that. It's not sitting there as our other bank loan, so I can just make a payment to it. We're not billed an amount unless I went beyond 2022. So how do I go about paying it back?
So I can let you know how we're doing it at TD. What will eventually happen within the next month or so here is it'll show up as a demand loan or a term loan, just like any other business loan would do. If you're looking to pay it back in the interim, you can do that one of two ways. You can do it through telephone banking, or you can do that at the branch. Unfortunately, there isn't a mechanism to do it online right now, but there will be one built. The application process was sort of priority number one, and getting that done and out to people was the first thing we did, and mechanism to pay it back online will be the next phase of this. But if you're looking to pay it back right now, at least at TD, you can do that through telephone banking or through the branch.
Okay. No, I am TD, but no, we're not quite ready to pay it back yet. But I think we definitely will hit our 2022 deadline. So that's great. Thanks.
To that end, a quick question on that. When you start pay, do you pay back the full 40,000 and then get a 25% back, or do you just pay back your 75%?
So at TD, you just have to pay 30,000 back, and the 10,000 will be forgiven. You don't have to pay the full 40 back.
Are you guys going to be sending reminders to people to do this? Because I would imagine come December 2022, you know, even if somebody had 30,000 of cash sitting in their bank account and they forgot to put it in by the 31st, come January 1st, would they just be out of luck in terms of getting the forgivable portion?
There'll be a notice sent out in the fall of 2022 as a reminder.
I'm sure you'll make a lot of people very happy if you do that.
So Amber here from Trendval, for our loans for that max, we are going to encourage businesses beginning in January 2021, whether they want to make a small monthly payment, some kind of principal payment, because after 2.5 years, it's going to be like the don't pay a cent events where everything comes due and all of a sudden then you lose out. So we will, and that's part of our, when we're asking people to do that quarterly online little survey, it's just a little plug to keep in contact, like from our perspective, that keep in contact. Do you want to start making some payments, even if it's $100 a month? And as the businesses start to gain some traction and ground again with their revenues, maybe they can do that. It allows us to keep in contact with them. What we don't want is all of a sudden, you know, $30,000 is due in December, and then they don't have it. So we'll be dealing with our clients regularly, especially annually, and seeing we can implement. We're encouraging small repayments, but actually with the government guidelines, they don't actually have to, but we don't want big loans due and not enough money, and we want people to get their forgivable portion.
To that, there's another question I had around that too then. Is there a point in which you have to spend the $40,000, or is that basically up until the deadline where you have to repay it if you want that 25% back? Like, do I have to have acknowledged the expense of that $40,000 in 2020?
Maybe
Oh, go ahead.
Adrian, I'll let, because
no, that's so before, under the old regime or old rules, that was, you simply, you know, you attest that you have these expenses ongoing, and you have, you know, the 20,000 or initially 50,000, then $20,000 worth of payroll. Now they're saying if you have eligible non-deferrable expenses, you know, and they've listed them: rent, property taxes, utilities, insurance. I would imagine there's other non-deferrable expenses as well. You know, they've also listed in the Prime Minister's release that he had yesterday that a lot of these expenses would be subject to audit as well. They haven't really released any more details on that. It sounds like, you know, now that this is a real primary criteria that you have these expenses, how they're going to audit it, and whether the application process will be more complex, I don't know. I mean, it was pretty cut and dry before. Do you have more than $20,000 of payroll? You know, do you have an operating account? Pretty easy. Click, yes, you're good to go. I'm not really sure, you know, what the details will be when they do come out. I mean, what if you've got, you know, ongoing key employees that you need to pay? Are those really non-deferrable? When you look at your business and you say, okay, well, if I let them go, then how do I restart this thing, right? There, you know, that's a huge part of your business, you know. You know, what about the ongoing payment of your mortgage? It says rent, but I didn't see mortgage in there. So is that a non-deferrable expense? You know, I guess those details will have to wait and see when they come out, you know, what is actually included in there, and how close can we get on that? I mean, most businesses will have more than $40,000 of expenses, but are they really going to be included in there? We don't know yet. So, you know, I actually wrote a small piece for our website this morning on that. So anybody who's on the Wilkinson e-blasts, we're going to be getting those out as quickly as we can. But, you know, this is going to be a major topic for, I would think, the next week as these details come out, as far as what's eligible and what's not. So how do you prove it? I guess to answer your question, I don't know at this point, but they will be looking at it. That's what they're saying. So I guess we just got to sit tight and wait to see what comes out.
And do I have to spend it by the end of the year, or will I be able to extend this through? Like,
there's no indication of that it has to be spent. I mean, I think if your business is ongoing, you will spend it, and whether it's the dollar that comes from this loan, or, you know, or goes to something else, I'm not really sure about that. I don't know that they'd be tracking that, but I think you just have to be able to, from the way I read it, you'd have to be able to prove that you had these non-deferrable expenses ongoing. So that's what I would expect. I think it will be pretty easy to prove. You could just look at your statements, look at what your fixed costs are, and say, okay, well, is there more than 40 grand there? Chances are you're going to meet this. But as far as what the government's specifically going to be looking for, I don't know. I'm not sure at this point. If you shut your business down right afterwards, or something like that, then you probably would have to repay it. I would think they'll have something in there. So I know that's probably not as clear as you want.
no, it's good, and I think what we have discovered through this whole process is that it's changing all the time. And I wouldn't be a bit surprised if we don't see, we've already seen the expansion of the deadline program for the extension of the queues. So I expect we'll probably see other things extend too, and it probably, even the loss of revenue requirement, I expect might increase as well. It'll be an overall annual loss that you'll be able to apply or be able to extend for eligibility as we move forward. We've been talking about a second wave of COVID impacting especially tourism-based businesses who were able to kind of make it through this period of time because they were still living off of last year's revenue. But for those organizations that were counting on, a heavy spring, summer to, reline the coffers, so to speak, they will not have that to fall back on next year this time. So those are things that we expect we'll probably be advocating for moving forward. Are there any other questions, or is there any other kind of topic of interest? What about commission? Does that fit into this criteria now?
Sorry, which criteria?
So sorry, the extension of the CEBA. So for example, if I'm not, or does the wage subsidy, does that now allow for commission in terms of that space? Like that's a challenging one.
Yeah, and I guess that's a whole different topic, the wage subsidy and how commission would fit in there. It's based on your pre-wages, and so I can't give you an answer right off the top of my head. There's typically a limit on that anyways for your $847 per week, it is, I believe, up to 75%. And so how commission fits in there, chances are if you have a large commission, go up, you're going to cap out anyways. So it wouldn't really be relevant in that situation. But as far as determining your pre-wages, I'd have to look into that. And if anybody has a commission-based business, just let us know.
A good question from Acer to everyone. They have an application for 75% wage subsidy, and they want to know who should sign that. Would it be the executive director or the bookkeeper?
I believe it's whoever has the ability to bind the organization.
So a signatory.
Yeah. So probably your ED.
Yeah.
Or would your ED? Yeah, probably.
Yes. Well, I think it's somebody who can say that they understand. That they have and it should probably be declared in your constitution too, and who your signing officers are.
Mm-hmm.
Yeah. Okay. Any other questions or any other general questions that anybody has? We've got a couple of good people here on the line.
I have one more quick comment just on the rent subsidy that's supposed to be coming out. So CMHC, you'll probably start seeing a little bit more about the CMHC released more information on their website, but it doesn't quite, it's not 100% clear on how this interacts with the Ontario government's portion of it. So we are starting to see details on this come out. At first they were saying, governments have to forego a profit, but I don't see anything on the CMHC website on that anymore, but the Ontario government's website still says that. So there's a bit of confusion there. The details are supposed to come out mid-May. We're obviously past mid-May since we're the 20th now, but now they're saying applications should be coming out in the later half of May. So I would expect that pretty soon, but so in case anybody has any questions on that, there has been some movement on that finally. I think they announced it April 21st or the 23rd, and there was really nothing until yesterday. So so that's encouraging. I think that's going to help out a lot of businesses. It's primarily going to help out businesses that were deemed non-essential. So the ones that had 70% or more of a revenue drop. So that's a much higher revenue drop than 75 or than the 75% wage subsidy was requiring. It's essentially those businesses that retail, service, hair cutting salons, that kind of stuff, where they're basically told to shut down, except maybe for the odd internet sale here and there. It's going to affect a lot of them. So we'll have to see. It still requires the landowner, the leaseholder to opt into it. But it is encouraging to see those details starting to come out. So just keep your stay posted, and it is coming. So.
Okay. Are there any other questions, or shall I record? I will try to edit out our little friend who showed up there for a moment, and then I'll post this.
Somewhat distracting, just a little.
Yeah, I don't know. Yeah, that would have been hard to talk through.
I wasn't sure if I was the only one seeing it. No one else reacted on this call, I gotta tell you, so.
Yeah. Well, I reported and removed as quickly as I could. All right. Well, thank you all. Again, any other questions? I'll give a couple seconds here to unmute if you need to. All right. So what I'll say is next Wednesday, we have our AGM. And I have 18 actively involved people here who I hope will join us, because that's going to be a lot of fun. And we will continue with this Chamber Chat Live perspective over the on Wednesdays at noon. So if you have any ideas or questions that you would like us to bring forward with a group of panelists or experts in the community, or just if you want to have a conversation, it will be a while before we can get this many of us together in a room. So please, we hope you'll join us again. Okay, thank you all.
Thanks, Jill.
Thanks,
Take
Jill.
care.
Thank you.
Thanks, Jill.